Hi everyone, I wanted to do a video based on this article by Brett Steenbarger, who is a psychologist that works with money managers. And what I'm going to do is I'll put a link to the article. I have posted it recently anyway, but I'll put a link to the article so you can go and read it. But there's just sort of one part that I wanted to focus on, and it's where he talks about two managers, money managers that he's worked with for a couple of years, who are obviously very successful, and he talks about how they've been so successful, their approach to trade in the markets. And he gives like 3 bullet points here, and I think they're really good because it kind of explains what I try and explain, but I'm not particularly good at explaining my ideas. So it's always nice when I find something like this, which kind of puts into words very succinctly what I'm trying to explain. And so these are the bullet points. He says, he says, have strict rules for when to buy or sell, and do not participate in markets when those rules are not triggered. Okay, and my impression of this is we only buy when there's a bullish close and a breakout of the high, and we only sell when there's a bearish close and a breakout of a low. And the whole idea is that, you know, you can argue forever about the analysis you should add to that, but simply, he's saying that it should be clear when you're trading, and that should be rule based. Okay, and that is something that I 100% agree with. Okay. And then the next one he goes on to is base these rules upon the activity of buyers and sellers at key price levels during key portions of the market day. So just to deal with the during key portions of the market day element, obviously he's talking about intraday trading there. And, as we know, it makes common sense to trade, say if we're trading the pound dollar, it makes common sense to trade them when there's the most trading activity, which is the London and New York session, okay, which is why we've always done that. Obviously on the higher time frames, then that element is not relevant. Okay. Base the rules upon the activity of buyers and sellers at key price levels. Okay. And like we've always been saying, you should sell when the market's going down, and you should buy when the market's going up. Okay, because then you're basing your trades on the activity of the buyers and the sellers. Okay, so you're not trying to predict what they're doing. You're reacting to what you believe indicates that the buyers and sellers are entering the market. Key levels, okay, well you could take that as being support and resistance. But for me, if price is changing direction, it's indicating that it's a key level. Okay, so you can argue the toss there. But again, what I like is the simplicity of what they're saying, and the fact that you could apply these concepts to many different ways of entering the market. Okay, so if you wanted to use a trend line as your tool to enter the market, okay, then you're essentially waiting for price to reverse, break that trend line, and then you're acting on the activity of the buyers coming into the market. And essentially all entry systems are doing that. However you decide to, however convoluted your idea for entering the market is, essentially they all boil down to waiting for price to change direction, and then your rules to be met, and then buying or selling. And you could argue that a confluence of certain elements gives you a higher probability of being successful. But the way I look at it, as an example, let's take an example. Let's say you used a trend line on the 4-hour charts. Okay, if you go back through your charts and draw trend lines and look when price reversed and broke those trend lines. Okay, say on the 4-hour charts. If you looked on the weekly charts, what are you likely to see? Well, you're likely to see weekly bars closing down, followed by a weekly bar that closes up. However you kind of break it down and whatever rules you use, essentially what we're doing is what everybody else is doing anyway. Okay, but we're just distilling it down and simplifying it to avoid being drawn to avoid falling into bias and human traps, trader errors, by simplifying it. If you add more information to that what you're basically trying to achieve, all you're doing really is increasing the chances of making a mistake. You're not really giving yourself any more of an edge. There's an illusion that you're giving yourself an edge, and it's very easy to buy into and believe that illusion. Okay, I'll argue day and night against that. I'm not saying that you're wrong if you do that, but why complicate something if you don't need to? And then the last point is exit positions promptly when the anticipated movement has occurred or if it has not materialized. Okay, so again, we're saying that if you're in a buy trade, really you should stay in that buy trade, or leave it unmanaged, at least until the market tells you that the buy-in movement, the buy-in interest has stopped. Okay, I mean that's obvious, isn't it? And so currently, if I'm in a buy, I'm waiting for a bar to close down before I make any management decisions. And it says here exit positions. You can also argue that exiting a position is a move to break even. So it doesn't necessarily have to mean you close your trade. Okay, but it's saying, base your exit decisions on what has happened in the market, not what you presume is going to happen. Okay, and again, we're not saying that this. Well, I'm not saying that this is the best way to trade and this is always going to work, but it's the logical way to trade. Okay, to believe that you can predict more accurately what's going to happen next and get better results than reacting to what has already happened, again, is a bit of illusion. And it's, again, I can see why people find comfort in that, because if you believe you can read the market and you can remove uncertainty, humans love to remove uncertainty. So your natural bias is going to be to go down that sort of route. Okay, but again, if you think about it logically, your decisions based on what's already happened are much less likely to fall into bias traps. Okay, so it's just like, those three points are made really clearly and well and much better than I could myself. But, they're good for me to kind of highlight what we're doing and why we're doing it. So if anyone's got any comments on that, then, I'd love to, hear your comments, agree or disagree. And like I said, I'll put a link to the article at the bottom of this video.